Hey, and welcome back to my channel. Today, I want to talk to you about hiring your spouse tax strategy. So a lot of business owners have a business, they become very successful, and then they hire their spouse to work with them. Naturally, the spouse comes and helps in the business, but what happens is that very often they start paying their spouse a salary, which is okay, but very often it's done incorrectly with some planning that is not real. Okay, so in this video I want to show you and tell you and really teach you how to properly hire your spouse on payroll, what to pay your spouse, what not to pay your spouse, and when not to pay your spouse. So we're going to cover everything in this video, including the fact that a lot of business owners say, you know what, I hire my spouse because I want to maximize her Social Security, or I want to maximize her retirement. So we're going to talk about all of that here. If you're new to my channel, welcome. My name is Boris Musheyev. I'm a tax strategist and a CPA. Every week I release a video for you, the business owner, a profitable business owner, to help you save money on taxes. You can use this video to educate yourself about what you can do next to reduce down your taxes. If you're new, subscribe, like, and of course, if you have any questions, leave it in the comment section below, and I will answer those as well if time permits. Okay, cool. Let's kind of get this going. Let's talk about hiring spouse. Okay, so this is actually a perfect example because I spoke to a client. He's not going to disclose his real name, but we're going to call him Robert, okay? So it's very close to his real name. So his name is Robert, and we just got off the projections call, and he's going to be saving on his taxes $338,000, okay? And the whole strategy involved, believe it or not, whether you need to hire your spouse or not hire your spouse. And in his case, we came up with a strategy not to hire the spouse and save him that much money on taxes. So we will dive deep into his situation as well. I actually printed some materials that this is his exact situation, his case study. We're going to talk about that. But I want to get into hiring spouse. Okay, let's get into the basics. Now, first of all, you have to understand, a lot of people think I'm going to hire my spouse, so I take it as an expense in a business. No. It's just taking money from one pocket, right, and putting it into another pocket. That doesn't work that way. It's your money. You file taxes together because you have a flow-through entity. Most likely, if you're a small business owner, you probably have an S corporation. If you don't have an S corporation, speak to your tax advisor and get yourself an S corporation. Okay, so this video, we're going to assume that you have an S corporation, so it's a flow-through entity. Hiring your spouse subjects you to paying payroll taxes. Okay, so remember, you pay payroll taxes as an employer. Every time you pay somebody $100, whether it's an employee, whether it's you yourself, or you're paying your spouse, you're paying $7.65 in payroll taxes. So for every $1,000, you pay $76, okay? And for every $10,000 or for every $100,000, and it goes on. Your employee pays exact same amount on their side. So when you hire your spouse to work in your new business, you basically end up paying 15.3% taxes on the payroll taxes, okay? So if you paid your spouse $100,000, that's $15,300 off wasted money. Now, why do I say wasted? In most cases, at least with my clients, tax advisory clients that we have in our tax advisory firm, their spouse does not work for them in a business, okay? The spouse does not work in a business, they still pay them a salary because they think they want to maximize retirement, which I'm going to get to in a second, okay? And they actually end up overpaying in payroll taxes. Now, if your spouse does in fact work for you in a business, then you don't need to pay them this crazy phantom salary. I had a client be like, well, Boris, like his wife actually got mad at me. She's like, well, what do you mean he can't pay me from the business? I'm like, well, do you share your finances? She's like, yeah. I'm like, do you guys like share the same bank account? She's like, yeah. I'm like, so what's the problem? He'll take distributions and he'll pay you. She's like, oh, he can do that? I'm like, yeah, and it's going to save you payroll taxes, okay? So if your spouse really does work for you in the business, then you pay them a normal wage, right? Whatever you would have paid anybody else that would have done their job. It's $20 an hour, $25 an hour, but not $60 an hour, okay? In most cases, we either took this spouse off the payroll, okay, or we significantly reduce their salary, the spouse, because first of all, the spouse in most cases is not and owner of that business, and they can get paid regular wages. They don't need to have that reasonable compensation calculation as the owner does under the S corporation rules. As long as you pay them for their hours, that's it. You don't need to pay them phantom salary. So hiring your spouse, that's strategy number one. Either take them off payroll, which I will talk about why later on, or completely reduce down. That's going to help you save on payroll taxes. Okay, Robert, the client that we're going to talk about here, actually had his spouse on payroll. Now, before we get to the Robert and talk about how he saved $338,000, let's talk about another myth that business owners say, well, my spouse is on payroll because I want to maximize their retirement. I want to get a retirement deduction. So let's just take a simple scenario. You're you're a business owner and you have W-2 employees, okay? Now your spouse is on payroll and you do 401k. You as an employer or an employee, you as an employee of your own business can put away $23,500 as an employee deferral into your 401k, okay? That's if you're under the age of 50. Your spouse can do exact same thing. Put away $23,500. This is before the 3% company match, okay? So business owners tell me, well, Boris, I won't be able to do $23,500 for my spouse. Think about it. How much are you saving by doing $23,500? If you are in a 30% bracket, then you're going to save about $6,000. But you're going to end up paying 15% payroll taxes on your spouse's salary. So if you take 30% minus the 15%, you're really left about 15% of tax savings. When your spouse retires, your spouse is going to pay taxes on that retirement income. And most likely, if you are a profitable business owner that is super successful, have some cash accumulated investing, and if you're not doing any of that stuff, get yourself a tax advisor, start saving money on taxes if your business is growing, okay? Then your spouse most likely is going to be in a higher tax bracket. So really, you're not saving much money, okay? And instead, your spouse is going to overpay. Now, I'm not saying this is the same scenario if your spouse works for the business. If your spouse works for the business, like I said earlier, reduce down their salary, still do the retirement. But if your spouse does not work for the business and they are on payroll because you want to maximize their retirement, the math doesn't make sense. I've done this with a lot of our tax advisory clients, okay? They come in and they say, Boris, I want to save money on taxes. This is what I do. Like, I undo a lot of things that they do, that their preparer possibly didn't tell them, and they do all these searches online. I actually have a lot more clients emailing me, be like, well, I looked something up on ChatGPT. Well, you should know you got to always fact check ChatGPT, although I love using ChatGPT for other reasons, not tax research, okay? So, with that being said, if you ever want to stop using ChatGPT, just get yourself a tax advisor. That's all I can tell you. The only reason you're probably overpaying in taxes and not getting proper advice how to treat payroll for your spouse is because you do not have a tax advisor. Hey, thank you so much for watching my videos so far. I wanted to give you a heads up. I've got this free PDF, 7 tax write-offs that every S corporation business owner must know. The link to this free PDF is down below in the description. So to make sure to download it, that's it. Now let's get back to the video. Now, those are the 2 things about the hiring a spouse. Let's talk about Robert and how Robert, my client, is going to be saving $338,000 on payroll. On taxes, not on payroll, but on taxes, okay? So Robert came to me, he's a new tax advisory client. He started working with us this year. I did his tax plan, and I asked him about what his spouse does for the business. He's like, well, he said she works for the business. She doesn't put in a lot of hours. She does mainly light administrative tasks. She helps him stay organized with the finances and so forth. I'm like, okay, cool. We found out he's overpaying her. I think he was paying her close to $85,000 a year. So right off the bat, after the calculation, like that salary could have been reduced to like $40,000 or even less because she's putting in way less hours and she's doing clerical work, so to speak. Okay, so I'm like, you're gonna save money right there. But I said, how about we just completely take her off payroll and fire her? He's like, wait, what? We're going to fire my wife for my business? I said, yes. The reason I said that because Robert owned 3 big properties, all commercial real estate, okay? And I said, look, Robert, if your commercial real estate properties, by the way, are already producing a loss, and you've bought a new one that's going to produce a loss, These losses are not tax deductible to you because you are a business owner and you're actively participating in your business and not in real estate. What if we take your wife off the payroll, take her out of the business, and instead she's going to help you manage real estate? And I said, by the way, how much of real estate does she already manage? He said, well, she actually manages all of it. And the new building that we just bought, she's just going to be super busy with that because it's like a lot of tenants. It's a commercial building. I said, well, we can qualify her for what's called a real estate professional. We'll take her off the payroll. He's like, well, Boris, what about my health insurance? I have health insurance through her. I'm like, well, just switch it to your name. He's like, well, yeah, it's only going to cost me a few $100s, right? So we did the whole thing. We took her off the payroll. We qualified her as a real estate professional to meet the definitions of the IRS. A lot of people think in order to become a real estate professional, you need a real estate license. Nope. You just have to meet the simple definition of the IRS rules, what it means to be a real estate professional. Number one, more than 50% of your time has to be spent in real estate, which Robert's wife will now start doing, okay? And she has to spend at least 750 hours in real estate, which she easily meets. Now I told Robert, now you've got this new property and 2 other properties. We're going to do what's called cost segregation on it. Cost segregation is this basically appreciated depreciation on your property. He got about $1 million in additional depreciation deduction. His net profit, by the way, we did his projections, right? So I do this with all of my tax advisory clients. We do projections. I just got off the projections call with him. He said, income is 1.7 million. How can we reduce down my income? We talked about it. We took the spouse off payroll. We made a real estate professional because she barely works in a business. She works more in real estate. So we made a real estate professional, and we are doing cost segregation study, which is going to give him about $1 million in depreciation deduction. His taxable income is going to go from 1.7 to $700,000, and it's going to save him about $338,000 on taxes. But it doesn't end there, right? If you've got a tax planner, there's more tax strategies to reduce this down, but this was a good start. This is the hiring your spouse tax strategy. A lot of people think, oh, I'm going to hire my spouse. I want to save money on taxes. No, maybe don't hire your spouse, right? I keep saying hire your spouse tax strategy, but it could go both ways. So these are actually the cost segregation reports that we did for him. So one property, he's getting $569,000 in depreciation. Another one, $314,000, and another one, $146,000. And all because we restructured how they file their taxes, how they qualify with the activities that they do. Ladies and gentlemen, if you don't have a tax advisor, please get yourself a tax advisor. If you are our tax advisory client watching this video right now, and you're like, hey, Boris, actually, I've got real estate and my spouse wants to get into real estate, call your tax advisor, be like, hey, I saw Boris's video on this. I want to start implementing it, or I want to start implementing it in the future. How do I position myself so that my spouse is a real estate professional? You know, we will help you, obviously, because we do all of your tax strategies. But if this is of an interest to you, you of course can reach out to your tax advisor and speak to them. If you are completely new, never heard of me before, just on my channel for the first time, go ahead and subscribe or schedule your tax strategy call with my team. And yeah, this is it. Thanks so much.